Alright everyone, welcome back to this YouTube channel. I promised you guys some more recaps, so I thought I'd do today's trades. Today's trades are pretty simple. So for those of you that are new here, I am on the Pacific time zone, so I get to the charts right around 4:30 a.m. So I trade New York only. Today's trade was really simple. There was really not a lot of thought process behind it. And simply all today's idea was we were just following the continuous pushes we have to the downside. So my expectation is to continue down, as I am looking to come down lower to balance the daily range. We're getting close, but we're not quite there. As far as the trade idea itself, all I need is 50% of this range to get hit. Depending how I react from it, I will look at where I'm reacting from. Here, obviously, the peaks and valleys crossed. On the 5-second, there's actually a news displacement candle that gets run here, but we won't talk about that because there's no need to complicate things. So here we have a reaction, bearish engulfing. We reacted from balancing the range. So a simple trade would be just to play the mitigation of this. Now, something I want to keep in mind is Euro on average moves about 68 to 75 pips a day. So if we look at what London did, London already moved beyond our average daily range. So once that happens, you don't want to be holding for big trades. So let's say we had a buy idea, I would likely be here or here that I'd be targeting. If I have a sell idea, it would likely be here. Because of how much London's already moved, I would not be looking for a big trade, especially on Monday, which is known for a fake move. So here during our trap timings, price is pushing down, and essentially I just want a mitigation of 50% of this. What I like to do is just go down on the 1 minute, and I kind of like to break down to see what's around our 50%. Here we have this buy to sell. So that to me is a continuation of the sell order. So for me, I just place a limit. Now you'll notice news will come hit these limits quite often, and it goes to target pretty quick. It did not today, for the reasons explained earlier, as our ADR was already met. So news is coming. So it doesn't have to come up here. I know I have a sell bias. I also had this as an area of interest. I believe news comes out at 6:45. So right now, the way I look at this, I would rather just keep my order on the extreme. Historically, if price is meant to go down, this level shouldn't be invalidated. So I completely avoid this other level I was willing to trade from just because where we are in the news. And in the event that I'm wrong, I'd rather eat one loss instead of two. Now, because this is not FOMC or NFP or CPI, I don't mind having a limit. Regular red folder news like this wouldn't be that bad a slippage for me. Whereas if you get a CPI candle that looks like that goes through your stop, that might hurt a bit. You might lose double or triple, where this you might lose, a little more, no big deal. So we can see the candle opened, we manipulated to the downside. So the news actually came out positive and technically, fundamentally speaking, should have shot it up. However, we're still looking to follow momentum. I find the red folder news that are not one of the main ones that I named off earlier usually don't do a lot in terms of direction, so I pretty much completely ignore them. And more or less, this is about the only time I'll use limits. aside from that, I market execute. Obviously, you wouldn't want to market execute this because you'd have something like that, and you'd have something like that, and in theory, the invalidation point's still in the same level. So to be really safe, you'd want to cover that same high. So this is why I like using limits. 6 pips is relatively small for Euro. Majority of my trades nowadays are 5 to 10 pips. And where I make my money is, if I'm right, I will add on to the position. So at this point, it appears we have selling pressure. I am willing to take a second position, but I do not want to get in too low on the leg because for obvious reasons, that's how you get stopped out really easy. So price never hits 50%. Here we create equals. Oddly enough, I created equals on my broker. So this is FXCM. FXCM actually takes this high. My broker creates equals, does not take this high. And Oanda is, I think, a couple pips lower and never runs this high. So FXCM is the only broker that does this. This was actually a DXY divergence. I would have been willing to participate in this had we come a bit higher. However, I break this down as this range first. Because that range itself never got balanced from the top to the high, I basically look for a range of the whole range, or balance of the whole range, I should say, on the 5 minute. So here we don't actually get it. So even though this trade would have gone from here, it does not meet our plan. However, nothing's changed. So this range is not balanced either. So now I just continue pulling this as a single range. And wherever we reverse is basically where I'll stop pulling this range. So price reverses right around here. So this is my range. Now ideally in a perfect scenario, I'd like to see this properly run and sell. We don't get that here. So this is too low to sell for me, so we avoid that. This is the initial reaction in this push too. So this is also known as inducement. We're inducing sellers into the market early. All right, so here we get a buy to sell. You can see there's some kind of orders happening here. We still don't have confirmation to execute. However, we do meet our 50%. Now, because this candle didn't engulf this one, I wait for one more candle as a confirmation. I don't have a problem with taking a bigger stop. So this one, I think I ended up taking 5 pips. A proper stop would probably be a little larger, but I was just kind of hoping it didn't come back. And that was the simple trade idea. So this whole trade idea just came from momentum. I don't need a lot to follow momentum. The only thing with today is, let's say we had only moved 30 or 40 pips. This would have gone to TP pretty quick. Price really did not want to move today. Like, it just hit TP. So here we are. Definitely have to hold a bit. But the whole idea of the trade still played out. So we got a 6.28 and a 3.6. So roughly 10R combined. There were a little riskier trades earlier, which I did not take. There was a buy here and there was a sell here. Those were both riskier to me, whereas this is a confirmation entry to me. So that is usually what I wait for. I also find before 5:30 in this range, when I get to the market, is where a lot of my losses come from. So for the most part, I like to trade from this time to about, where is it? 8, about 8. So this is kind of my window, my 3-hour window where I make the most money. I'll trade up to 9 my time, which is New York lunch. Now this window here, there hasn't been a lot of trades for me if I go look at my journal over the last couple of years. And statistically here, I haven't had as many winning trades as I get in this 3-hour window. So this is where I try to do the bulk of my trading. I would say 90% of my trading comes in this 3-hour window. You know, had I taken this and decided to take that and I took this, I likely would have just walked away from the chart and not even looked for this stack, but obviously not the way it went down today. So that's pretty much it. Very simple. We didn't overcomplicate it. We didn't need 90 confluences to enter a trade. These are just simple mitigations and range balances. So basically figure out which direction you want to go off the higher time frame and just get the 5 and the 15 to line up with that. Yeah, I hope you guys enjoyed this video. If you haven't subscribed, definitely do, and I will see you guys in the next one.